Olakomi Oshobu, Executive Director at Readings Investment, joins me now for an update on market trade. Thank you so much, Olakomi, for joining us. Now we're looking at the markets in yet another lackluster mood. Still keeping an eye on the US FOMC meeting. Although we're looking at some healthy bargain hunting, up 0.14% as the OSHA index. How much of an effect will the FOMC meeting have on the market today and tomorrow?
Well, FOMC meeting starts today, and the announcement is expected to be made tomorrow afternoon. Tomorrow evening, after our own market has closed. Definitely, locals will be looking. Both locals and the foreign fund managers will be looking. Expecting the outcome of the meeting. But one thing that is clear is that at one time or the other, Fed will have to start tapering. Removing part of the fund that has come into the market through the quantitative easing. But one thing Fed has done very well is to keep letting the market know that this fund will at one time leave the market. So market is aware of the meeting, is aware of the fact that this tapering will commence, and also Fed has also stated some of the reasons, conditions that to be met by the economy before the tapering will commence. One of it is the unemployment rate in the US, which, to me, we have not reached the threshold at which Fed is looking at. Fed is looking at unemployment below 7, around 6.5%, and currently unemployment is still, I think, above 7%. So Fed, yes, my comments tapering, but it will be at a very small level for now. So markets already will be pricing those one in. Since we already know before. So I don't think tapering would not come as a surprise to the market, and the effect would be minimal to me.
Now, talking to you earlier on, you did say that the banking sector activities are largely responsible for the lingering market correction that we're seeing. It's saying that our own local factors is what is actually impacting more on the market rather than what's going outside of our shores.
Sure, because if you look at the foreign market, US market, UK, European markets, for the month of August, they all did very well. And most of the market, the Nasdaq, the Dow Jones, they were trading at a level never seen before. For Nasdaq, the level never seen since the year 2000. So why is our own market not responding or not moving in tandem with what is happening in those markets? The only reason I can see is what is happening locally, which is the effect of CBN policy on cash reserve ratio on public funds. And if you look at our market, the Fed the announcement was made sometimes end of July, and since then the market has been has been behaving very poorly. In the year. So to me, there is no other thing than the effect of that announcement. And what investor will be looking at is that how will the announcement, how will that policy affect the ability of banks to generate income going forward? With the reduction in funds at their disposal, extending credit to corporates and individuals will be reduced, and also interest rate has gone up because of that. So it's not just the banks that will affect, it will affect banks' ability to extend credit and the interest income and other auxiliary incomes. Also, companies producing will have to contend with higher costs arising from higher interest rates, and would they be able to pass those costs to the consumers? So those are the reasons what investors are looking at, and those are what will continue until we know exactly what will happen at the end of the quarter. So I think this scenario will continue until the end of the quarter, when market will start coming, when banks will start coming out with their results. Will they meet expectations? Will they expect expectations? Those are the questions we have to wait and answer at the end of the quarter.
Now, Olakomi, it means that we were going to see a further correction in the OSHA index, and now at around 35,000 points. Year to date has slipped down to around 27% for the year. How much further do you think the OSHA index will slide?
No, I'm not saying that the market will slide, but there won't be much activity between now and the end of the quarter. People might be, well, it depends on what everybody thinks. If you think that the banks will still meet expectation or surpass expectation, people will try to accumulate bargain hunt and wait for the quarter. So the market will trade like this on a flat level, or less little drop or little upside until the end of the quarter. So there won't be, if you remember, this index got to 40,000 sometimes this year. So we're already more than 10% below where the high of the year. So I don't think that it will go down rapidly, except when the quarter comes out, the result, my quarterly result comes out, and it far below the expectation.
Okay, Kwame, let's quickly, still talking about results, just 1 minute or so. Let's look at Guinness's full year results ended June 2013. And now some have described the numbers as disappointing. Gross revenues came in at 131.4 billion, up just 4.1%. Your thoughts on that?
Well, like you said, revenue came down about 5%, and the bottom line came down about 17%. And also the dividend, even though the company is paying out almost the dividend, almost the earnings made by way of dividend, of 7 naira. If you look at that one, it's a yield of about 2 point something, less than 3% dividend yield. So it's nothing to write home about, and the market is not, I don't think the market will see it as positive for the company.
All right, thank you so much, Olakome. We're going to have to leave it there. Thank you so much for sharing your thoughts with us. Olakome Oshobu, Executive Director at Readings Investments, talking us through market trade at midday.